Well, shifting focus now to Iraq, which could offer a preview of how the United States may use its control over the dollar-based financial system to pressure countries that continue trading with Iran. Washington has already sanctioned several Iraqi banks accused of facilitating Iran-linked transactions while stopping short of that could destabilize Iraq's wider economy. The US has also warned that countries providing Iran with an economic lifeline could face severe consequences. That brings major Iranian trading partners, including China, the UAE, Turkey, India, Pakistan, and Oman, into focus. For Iraq, the vulnerability is particularly high because much of its oil revenue and foreign reserves remain tied to the US-led financial system. Washington's leverage over Baghdad is rooted in Iraq's dependence on dollar flows. Since the 2003 US invasion, Iraq's oil revenues have been closely linked to the US financial system, with substantial reserves held in the United States. The US has already used that leverage. In April, Washington halted a $500 million cash shipment to Iraq and suspended parts of security cooperation. US sanctions on Iraqi banks have also increased the risk of dealing with Iran, but the economic relationship between Baghdad and Tehran has continued. Iraq's trade with Iran exceeded $10 billion in 2025, while Iraq pays Iran around $4 to $5 billion a year for natural gas that's used to generate electricity. That makes any attempt to sever financial ties with Tehran economically sensitive for Iraq. The Iraq example highlights both strength and the limits of US financial power. Iraq has fewer alternatives than larger economies and remains highly dependent on access to US-led financial architecture. Analysts say that tighter sanctions could further expose Iraqi banks and informal financial networks that are used for Iran-related transactions. But applying the same pressure to larger economies such as China or Turkey would be more complicated because they have greater financial resilience and more alternatives. Washington also faces the wider risk of disruption to global financial system. That explains why the US has so far combined sanctions and financial pressure with caution. The broader question is whether Washington can use dollar access to isolate Iran without creating instability across the global financial system.